Now I'm going to start practical questions. Before I start practical questions on depreciation, I must remind you about the assumption of our accounting cycle. I mean to say which accounting cycle we are going to adopt in our practical questions. First of all, transactions are converted into journal entries, and journal entries is converted into ledger posting, and on the basis of ledger posting, trial balance is prepared. On the basis of trial balance, final accounts are prepared. It means in our questions, all transactions will be converted into journal entries, and after that, ledger posting will be done. And one thing more, when you find the question in your examination or in your homework, first of all, I strongly recommend to make the outlines of the questions first, so that it becomes more easy and more understandable for you. Suppose the question is, on 1st January 2013, a company purchased a machinery for Rs 10,000 and the estimated useful life of the machinery was 3 years. And it was estimated that after 3 years, the company will be able to sell it for Rs 1,000. Draw journal entries for first 3 years, and the books are closed on 31st December each year. This is the text of the question. First of all, let us make the outlines of this question. 1st January 2013, bar, purchased, bar, 10,000, bar, 3 years, bar, 1,000. In the next line, 31st December each year. What it means? This machinery has been purchased on 1st January 2013 for Rs 10,000 and the working life of this machinery was 3 years and the scrap value of this machinery was 1,000. The books are closed on 31st December each year. So you can see that within these 1 or 2 lines, the whole of the question has come out. So on the basis of this question, you can start the question. I mean to say your solution. Be careful. In the upcoming episodes, I'll be writing down the outlines of the questions. You may not find the full text of the questions in future. So, on 1st January 2013, this machinery was purchased for Rs 10,000. And after 3 years, this machinery will become 1,000. So one thing is clear. The total depreciation is Rs 9,000. The total depreciation is always equal to the cost of the assets minus scrap value. So the total cost of the machinery is 10,000 and minus scrap value is 1,000. So total depreciation 9,000. But this is for 3 years. We have to calculate annual depreciation. So depreciation for 3 years is equal to 9,000. So the depreciation of 1 year will be equal to 9,000 upon 3. That is 3,000. It means the annual depreciation on this machinery is Rs 3,000. So let's make the journal entries. On 1st January 2013, you have bought the machinery for cash for Rs 10,000. So what will be the journal entry? Machinery account debit to cash account. Machinery account has been debited. You know the rule. Debit what comes in and credit what goes out. This rule is for the real accounts. Machinery account is a real account because all assets are called real accounts. So the machinery has come in, so you have debited machinery account. Then to cash account, credit what goes out. Our cash has gone out of the company. So cash account has been credited. So to cash account, Rs 10,000. And what will be the narration? Being machinery purchased. Now, the day of closing. Our books are closed on 31st December each year. So on 31st December 2013, we have to provide depreciation, the annual depreciation. During this year, we have used the machinery for 1 year. I mean to say, the uses of the machinery during this year is 1 year. and we have to provide depreciation for 1 year. We know the 1 year depreciation is rupees 3000. Be careful. Depreciation is always provided on the day of closing. So the journal entry will be depreciation account debit to machinery account. You know, depreciation account is a nominal account. This is our expense. Depreciation is our expense, so it must be debited. If you remember the rules of journal entry, the first rule was debit all expenses and losses, credit all incomes and gains. Means if there is any expense, that must be debited. This depreciation is not a cash expense. Means we are not going to pay any cash to outsider. So it's a non-cash expense, we can say. And it is always provided on the day of closing. So the depreciation for 1 year is rupees 3000. So we have debited depreciation account rupees 3000. Again, let me remind you, depreciation is a nominal account because it is an expense. Now, to machinery. Machinery account has been credited. What it means? When we provide the depreciation, it reduces the value of our asset. And you know the rule, journal entry rule. Credit what goes out. Our machinery has not gone out, but our machinery has lost the value, because when we provide the depreciation, on one side the depreciation reduces our profit. The reason being, depreciation is our expense and expenses reduce our profits. And on another side, it reduces the value of our asset, because 3000 depreciation has been provided on the machinery. It means today we have lost the value of machinery by rupees 3000. So that's why machinery account has been credited. So what will be the narration? Being depreciation provided on machinery. So one more rule I would like to remind you, that all expenses and incomes are transferred to profit and loss account on the day of closing. And in this question, the day of closing is 31st December each year. The day of closing means when the company prepares final accounts and trial balance. So during this year, we have incurred the expenditure of 3000 in the name of depreciation. So this depreciation account will be transferred to profit and loss account. It must be clear to you that all expenses counts or incomes count, I mean to say all nominal accounts, are closed on the day of closing. Means they are transferred to profit and loss account. So recently we have debited depreciation account, now it will be credited. So what will be the debit? That will be profit and loss account debit 3000 to depreciation account 3000. And the narration will be being depreciation account transferred to profit and loss account. So in this way, depreciation account has been closed. Now come to the next closing. And the next closing is 31st December 2014. What we have to do today? We have to provide depreciation. So what will be the journal entry? Depreciation account debit to machinery account rupees 3000, and this depreciation account will be transferred to profit and loss account today. I am to say the day of closing. Profit and loss account debit to depreciation account rupees 3000. So in this way, two journal entries are passed on the day of closing. Number one, depreciation is provided. Number two, the depreciation account is transferred to profit and loss account. Now, 31st December 2015. So we have to pass two journal entries. Provide depreciation and then transfer depreciation account to profit and loss account. So what will be the first journal entry? Depreciation account debit to machinery account, and then profit and loss account debit to depreciation account. Rupees 3000 for both of them. In this way, we have completed the question.